Okay, welcome to part 1.1 of this guide. So unfortunately, I actually missed a little bit off the slide there where I completely missed the whole slide. So yeah, before we get into the misconceptions of Forex, let's just talk about why choose to trade Forex anyway. So what is Forex? So why choose to trade Forex? So one is, as I spoke about, leverage. Leverage is so easy to come by in Forex, okay? So most brokers would probably offer you nowadays, to be honest, because the government has been a bit stricter on leveraging. They'll probably give you 1 to 50, 1 to 100. Currently, I'm on 1 to 30 as I am funded with a company, and having too much leverage could easily blow your account. It all depends on how you use leverage though, but yeah, leverage is easier to come by in this market than most others, where in the stock market you may not even get any leverage and you may have to use your capital only rather than using a small amount to grow. Next thing is education. Education is very, very easy to come by in this industry, for good and for bad though. So there are very, very good education out there where you can get free ones that are amazing, that you can learn a lot from. For example, like Baby Pips. But however, there are some paid ones where it's a bit predatory and they promise you too many things, and they can't keep up that promise. So just be aware of that. But in terms of like learning things about Forex, everything is available for you if you just look hard enough. Barriers to entry are very low in Forex. You don't need a lot of money. All you really realistically need is to be over the age of 18 and to have a laptop or a computer. But even if you don't even have those, even your phone for most cases, if you already have MT4 or MT5 already installed, then you are able to do it. However, I am recording this after MT4 and MT5 got taken away from the Apple Store. If I do believe as well, the Google Play Store as well. So it all depends as well. You can use other platforms, however, MT4, MT5 seems to be the best. So as I say, yeah, barriers to entry are lower. Why choose others? So the first one is as I said, the promises of some gurus out there are insane. Okay, they're not real. They give you the wrong start to your journey, as you're expecting to get this Lambo, this huge mansion by the end of the week, and then you completely fall short of it, or you, even worse, you blow your entire account because you're trying to get that and you're trying to reach that goal quickly. It gives you the wrong mindset to start off with. Luckily, I didn't actually get into Forex because I wanted to get all this lifestyle and stuff like that. So I didn't have that mindset to begin with, and I never looked up to these gurus where they promised that. So luckily, obviously, I had that mindset, at the start, a healthy mindset at the start, where I knew it's going to be a slow growing business. But yeah, for you guys out there, just be careful. Volatility is great in Forex. Okay, they'll always 1 is 24/7. The market's always available. However, the volatility can be a good thing or a bad thing. So volatility is good because it gives you good opportunities, but also increases your risk as well. So there's two sides of the coin with volatility. You either use it correctly or you get destroyed by it. 3 is less information available. So what I mean by that is, as I said, there are a lot of education. However, in terms of information about the market, there's not a lot. So obviously we're talking about whole countries here, right? And there's only a certain amount really of news out there that's really that really affects the market all too well, all that much. And the market moves, to be honest, I would say it's mostly technical that moves the market. And with less information available in the market, I would say the reason why. Less information available about the market, I would say, is because there's a lot of over-the-counter market trades where you don't have to go through a centralized body, financial body, unlike some stocks and S&P trading and so on and so forth, where you can see all the traders of active trades and sell limits and so on and so forth. But here, there's too many over-the-counter market to really make those indicators or information really relevant, because sometimes you'll see the market move without knowing why the market moved, and you don't have data to really back it. So yeah, just that's one of the reasons as well. I would say Forex is why not choose Forex. However, with all these bad, there is also plenty of good. As I said to start off with, there's less barriers to entry. Education is plentiful, and the opportunity is really there for most people that are willing to take it seriously. And the good thing is, if you can learn how to trade Forex and other currencies, it's all interchangeable. This skill is interchangeable. You just need to tweak your strategy a little bit here and there for trading different markets, but overall they're not normally the same type of strategies anyways. But yeah, so that's basically it. Sorry about that, but yeah, on to part 2.